Hello everybody and welcome back. In today's video, we discuss everything to do with the stock, crypto, and commodities markets right now, including the key levels that you need to be looking at. It's been a wild 24 hours with massive risk on taking across the board in terms of Wall Street, algorithms, and everybody else. But is this the real rally? Is that the bottom that's in? Or are we about to see some massive news come out that could shake these markets all the way back down? Stay tuned as we cover it right now. See you soon. So welcome back to the market close daily summary here for the 9th of March 2022. And first, I want to say a massive thank you to the community and everybody else. We just hit 80,000 subscribers. So thank you so much. Everybody that's been interested in stocks, crypto, and of course commodities has been subscribing, following the channel, and sharing around. And if you haven't already, I encourage you, jump into our Discord community, follow us on Twitter, and come and get involved in some great discussions, because it's thanks to you that we continue to do these shows. So firstly, the biggest bit of news here, let's just talk about it. Amazon split. First time for a long time. Look at this. First time since the dot-com boom, and after gains of 4,500%, if you wanted to look at it that way. It jumped 7% after hours, almost as much as 10% at one point there, and it's a mixture of a 20-to-1 stock split and 10 billion of share repurchases. So that's two stock splits that we currently have going on in the markets. Remember, Google and also Amazon. People have been waiting for Amazon for so long. So if you've been in that stock, it's a nice welcome bounce. And of course, for some people, it might be a little bit of a get out of jail with some of their options, of course, if they've been long recently. Let's talk about the day. In general, we start here with the markets, then we'll go through some commodities, general indicators, macro stuff, and we'll get started with the indices, stocks, etc. later on in the video. But look at this. It was green across the board. It was a clear risk on. And as we've been warning recently, and we'll talk about US oil in just a few moments, it sold off heavily. We saw Brent and oil and commodities get absolutely tanked in the sessions, and that's because, of course, they'd gone up too hard too fast. We always have this story, and the story goes, if you're in an elevator and someone is talking about buying something, it might be time for you to potentially get out. I told everybody about an 85-year-old that told me, I need to be in oil right now. This is someone who historically has hated the oil industry. All of a sudden, alarm bells. Many of you commented in the previous video about hearing such stories. So which was the best sector to be in? Well, it was actually risk on. So it was NASDAQ, 3.58% here. Dow Jones up 2, S&P 500 2.57, and the small caps also doing well at 2.82%. Let's scroll over here to look at the sectors that were doing the best. And Jets was coming back hard here thanks to oil getting, I guess, tanked. And that was 5.48%. But I think it was more the story of certain things. Look at Nvidia. We talked about the support getting hit again around that 210 level, and it just jumped straight back up, 4.34%, XLK 4%. Even financials jumped up 3.67 thanks to the 10-year rising. So it was mostly a day where it was risk on and it was a huge rotation across the board. But is it going to last? Well, one of the things that we always do, and I think we'll continue to follow this, is the canary watch. And what we call the canary watch is when the US 10-year and 2-year spreads invert. So effectively, when they go negative, we need to be paying attention. At the moment, we're at about 0.23%. It's actually now gotten a little bit further away, thank goodness. But this is what we call the canary watch, and I think we're going to be doing that all of 2022. We also want to talk now about this bullish move. Has it confirmed that we're now going back into an uptrend? Well, hold back, everyone. It certainly hasn't. We're about to print a massive number, you would think. And depending on how the market chooses to trade with it, remember, don't try to impersonate or understand what the news is going to go like. We need to see the price action. We may actually see a bit of a rally here like previous years, where in midterms, we've seen a little bit of a rally come March, April, and then a further dump in the later end of the year. Is it going to be the same? That's something we've talked about. I think this kind of sometimes makes sense because look at how much leverage shorting has gone on recently. They've done a full wipeout here. We were leveraged long for such a long time since the 2020 crisis. And since that point, we've been leveraged long net, and all of a sudden, look at the drop off here. into this current crash. People have really been hit around, and I think that's a big deal. If you haven't already, come and follow us on, of course, the Twitters. We at FX Evolution over there. We did put in some interesting information. Obviously, we post a whole bunch of things. By the way, did you see that nickel? What a sign in terms of 200% increase and constantly getting limited up. That's a big deal. Let's get into the charts though. US 2-year, 10-year. All right, how could I say it? It's pretty bad in terms of how much it's gone up, but there is a good sign. It went slightly away from the inversion over the last 24 hours. Now, one thing I saw, and I've seen this 3 times now, is my bond indicator was telling me on the 24th, on the previous session, so that is the one with the obviously invasion itself and the drastic market sell-off that occurred there, and in the previous session, as in the one yesterday, that things were improving. Now, I haven't actually seen 2 readings on that, so definitely subscribe to the channel, because if we start to see multiple improvements here on the bond market, on other markets around the market health, that of course could be telling us that yes, the bottom is in. Not currently, but certainly there. The VIX, the volatility index, continues to swell. It closed on the support. This is our trend line that we've been following for a while. We're struggling to get past 37.40. This will only breach if the market makes a new low, and of course then it's really on for the shorts. And at this stage, we're basically sitting around that support. So very much a tough number. And as I've said many times, the markets like to lead into big bits of news by going towards a point of resistance or a point of support. The PCC, put call ratio, we actually saw puts rising as I guess the market went up. A lot of people probably trying to short through that. Not an easy thing to do. So, selling the rip has been pretty good recently, but then yesterday's one, a lot of people clearly placed sell the rip style trades. We'll talk about that more soon. So here is gold before we talk about US oil, 2070. So we hit that level and then we sold really deeply off. Now there are a few different reasons why this happened, but one of the big things is it hit everything we asked for. Remember, gold was a great move. We liked the 1870, we liked the 1910, we liked the 1960, and it got all of these levels, and then it hit the 2070, which was our final take before possibly a massive move. It's hit that and gotten sold off very, very heavily here. So let's now take a look at the charts. What are the charts telling us? Nothing good yet for gold, okay? So if you're in this, it might still spike up and we might be on for a great trend here, depending on what goes on with yields as well. That's going to be very important for gold. If you know what you're doing, you can actually follow it off that. But here we have gold and we've got this idea that it's coming back down, testing this. Have we seen any bullish action yet? No. We really want structure. After such a big fall, we need structure to form. I think we come back to this chart in a few days, if not at least one day, to find out more information. Nothing that we're seeing there is looking that good. Then we move over to US oil. Now we saw palladium, which was the one that was telling us that maybe this whole metal and oil commodity big boom was at least going to tank. It fell off heavily, like it sold off like 17% in the previous sessions. Now we've seen oil sell off to the tune of almost 20%. I kind of feel bad for people out there that don't think about these things happening. If you didn't have a stop loss and you were in it heavily leveraged, someone probably got really badly hurt. And I do feel sorry for the people out there that get into these positions, because often retail doesn't understand that when everyone's talking about something, it becomes a big problem. It broke through down here. It obviously rallied back up after that sell-off, makes it look good, makes a new high, traps a bunch of people into the purchase, and then tanks. So the good news is, and the bad news is, I would say there's probably going to be some rally. Okay, usually when you get such a massive sell-off, there's still a lot of inherent buyer demand. It will eventually base, it will rally, but as far as I see it, this could be the end of the oil spike. And you might say, but Tom, I think it's going way higher. I've heard $300 a barrel, $200 a barrel. We can only go off what the price action's telling us. This is a blow-off top. When a blow-off top happens, we often see a bounce called the dead cat bounce. And then you see the crippling movement after that. If you don't believe me, look at some of the big stocks last year that were going crazy. I'll give you one straight away, Moderna. Go check it out. You'll see that it gets pretty brutal. Let's go into the stocks themselves right now, because that's where a lot of interest is coming back into the market, a bit of risk on. So we saw Tesla move towards 860, a good previous level of support, acting as resistance. I think the most important thing here for Tesla, everyone can probably scream it on the charts. Does anyone know which one? It's going to be the 20 moving average. Look at this. You guys know what's up. Here it is. The 20 moving average has actually stopped Tesla in its tracks every single time. So it's funny, ahead of massive news, which we'll talk about soon, that we're at the 20 moving average. I'm kind of feeling cautiously optimistic. Okay, now we don't know we know the result's going to be pretty bad. I would say it shows bad. We don't know how the market's going to react to it. That's something that a soothsayer might be able to tell. Maybe you know in the comments down below. Let me know which way you think it's going to react. Probably most of you are going to think bearish. But here we have the opportunity of a potential lightning bolt. That is a trough, a peak, a higher trough, and a higher peak. This could actually get us out of this downtrend that we've been seeing here on Tesla. And some of the markets are getting close to these levels. So obviously Tesla breaks this level. Next stop is going to be around this zone here, which is that 900, breaks through that. The big deal, the really big deal is going to be that 945, 950, and it breaks through that. Everyone's going to be feeling FOMO completely. And if oil continues to go down and these metals and minerals go down, remember the general public is well aware of what's going on in commodities now. They know. They smell out this oil. They see it when they go and buy fuel for their car. It will have a positive effect on orders in EV space. People will say, but Tom, the costs are going up. I agree with you. But if things turn out rightly here, I would say that retail community or generally humans have like maybe a 1 to 2 year memory cycle. We forget things pretty fast. But when it's become such a big concentrated thing, we tend to remember for a little period of time. So at least 6 to 12 months, there might be a little bit more of an interest in EVs. And if other costs come down, it could be a really great cycle for growth there on the Tesla side. You can agree or disagree. It's just something I'm thinking about. Here we have Apple. It bounced off the support. Really strong stock. I mean, this thing's a beast. I've been on record saying I don't like Apple as much as maybe the Microsofts, the Googles, or even the Amazons over the longer term. That's my personal opinion. It's still a tank and a beast of a stock. You know where the big issue is. It's this downward trend line. We've currently seen buying off this support, and it's barely even down. I mean, you're looking at this. If you were just only in Apple, kind of like Warren Buffett in some ways, you'd only be down 10% on a market that's down a lot more than that. So great bouncing there. This is a bit of an indicator over market health. If Apple gets underneath this level in the future, bad things, all right? And it is possible. We'll see how this print comes out. Amazon, big news, obviously, is that it did the split. You could almost say that a big reason why this might have happened is you take a look at this on a weekly, and Amazon was kind of on the precipice of disaster. You could see if it broke underneath here, it could have really sold off heavily with the algorithms getting involved. Then suddenly, what happens? Oh, stock split. Of course, that's going to hype the price back up. We've still got a downward trend here. It really depends on the market, how this is going to work. But remember, there's two actually now in stock splits. There's still the Google stock split. And if we actually go over to Google, a lot of these charts are showing very similar things. Support currently, 200 SMA, so 200 moving average, 50 moving average, and a potential for a double bottom all of a sudden. So there's a lot. You can see why things can flick like this all of a sudden in these markets, because if we breach through there, people are going to start talking about the split, and you're going to see some hype come back into these markets. Just remember, things can change quickly. And while it's still a bearish tint here, no doubt, then if things change, you've got to be ready for them as a trader or even as an investor. Let's take a look at the DAX. That's been a bit of a sign. Now, we knew the DAX moved way too far away from the rest of the broad market. It sold off so aggressively. I mentioned that in the previous video. It's now bounced back up, and it's bounced to the previous 2020 highs, which is now, you would think, going to act as potential resistance. Again, news coming out, even though it's for America, but there's European unions coming out talking about stuff as well. We'll say that in a second. It's right at resistance ahead of the news. Again, could sell off, could go long. Big guess here at this zone. We just know it's a zone of interest. And if the market goes long, then we're going to have to look potentially for buys. If the market goes short here, then we might want to join in on the short, and we could be even looking at new lows. That's the type of thing that happens ahead of these big bits of news. IWM, Russell 2000, nothing yet. We've got our big support, now big resistance, showing us the broader kind of idea on the markets. Remember, this is the smaller caps for anyone that's joining us for the first time. This is like the lifeblood of the US market. If they're not doing well, it shows us sickness. If they're doing better, it shows us that there's health across the board, and or at least monetary policy. Yeah, one of those two things. The Dow not telling us too much. If we look at it on a weekly, it looks currently like another rejection candle, which is why if it closed bullish, you would have to feel suddenly more bullish about the market, especially if follow through happens. So let's say we get a market close like this. We would then have a weak rejection coming through. We know that this March-April period has historically been strong in other midterm years, regardless of what else is going on. If you get the follow through, it really could be a little bit of a rally, and maybe it goes like this. You know, a dip later on. That could be a very big scenario. So we'll continue to watch this. If this closes bearish this week and we get sell-off over the next couple of days, very important, down we go. And that's when our 3,800 SPY and our NASDAQ really lower all comes through. Speaking of the NASDAQ, let's take a look. Big bounce here, moves up to very important level. We've got our downward trend line that's been intact now for a while. 20 moving average daily, been pretty important. They're all meeting around the same point, again ahead of the print. And we've got here currently support. Will it act as resistance? You would probably think so. Let's actually jump into the futures here just to get a bit of an idea. So that's what the bounce would look like at the moment if it closed weekly like this. So we'd have 2 buys, 1 negative, which is what sent us down here and why we got so bearish for the week. Then at the support, even if you look at the video, I was getting a little bit more optimistic on it yesterday because it looked way better. And then all of a sudden it comes back up. This is, you know, the crunch time between the bulls and the bears. They're fighting it out. You can tell. It's literally a zone of aggression both ways. Support, resistance. Where do we close? Right there. So we're trading currently down about 0.21% after hours on the NASDAQ. Not too much. We know where the trend line is. And if it breaches, then we've got to feel a little bit more bullish up to the 14.4. And if it breaches the 14.4, well, you've got to feel like maybe there's more to come in terms of the bull market. From the bear side, you're really just looking at it here. Once the print comes out, the information, even if it spikes up, this could be exactly where they start shorting it back down. So you've got to be very careful in this range here. I think this is one of those points where if you're long for the longer term, great. If you're looking at it from a risk reward standpoint though, there is a lot of fighting that will go on here on the charts. Same for the SPY. It's very similar. We talked in the previous session about all those 4,000 or 400 SPY puts. We talked about the 4010 or the 4,100. These were where a lot of puts were printed. These types of rallies happen to trap people into positions as well. And you know what was happening? We actually saw a lot of calls, but maybe the market wanted to get even more calls into the market or something before the end of the week. So let's have a look at 2 weeks away expiration, and we'll do that in just a second. I just want to show you again the 2 hour here for the SPY. Support, resistance. This zone before the news. We breach, big problems, through 4,400, effectively a double bottom, yeah? So bulls and bears have had a case here for a few days and they're fighting it out, and this is what we're looking at. So tough zone here, depending on the news, there might be some reactionary trades you can get to. This is the expiration for the 18th of March, 2022. So what it's showing us here is it's showing us that there are tons of puts sitting at the 380 and sitting at the 400. There's also more puts all over this level than calls. So if you rally the markets up, you're probably, especially, you know, from 1 or 2 days, you're probably going to get a lot more calls in, which allows them to make maximum profit. Remember, where the expiration is pretty important. So there's a lot of puts. I mean, the 400 was just a phenomenal put wall. Not only was it a put wall this week, but it's also a put wall for the next week in terms of the big options expirations. We've got to continue to watch this and just see how it plays out. Sometimes we bring this analysis in. Is it going to be 100% solid? No. I like to think of this as like a 5%. It's like the cherry on top of the cake, if you like the cherry. Maybe you want the strawberry or the raspberry. I'm not too sure. But it is something that you're looking at and you're adding to it. Now, Bitcoin. Okay, so Bitcoin came out, leak of information, sent it through. I made a bit of a hilarious post. I thought, saying Bitcoin's popped, is NASDAQ going to pop with it? They kind of look fairly similar before the pop out chart. Turns out, yes, the NASDAQ did move. I don't think this market's actually leading it. But what I do think is that the Bitcoin market is still, the actual crypto, Bitcoin, is still very strong. There are a lot of people buying into this and a lot of believers, a bit of hodling here going on. The market's coming down now. So it's hit this previous level of support, resistance. Obviously, we've got our top resistance at 45, 46. That's where we really feel way more bullish for the medium to long term on crypto. And it's coming back down. So what would we be looking at in the next 24 hours? Well, I think this zone down here makes a lot of sense, yeah? About that 40,000 area, we're sitting at 40,850. If it's going to bounce, this would be the most logical place for it to bounce. If it gets underneath this zone, back down to 37 we go. And when we go, if we ever go under 37, I'll stick with it. No, I don't know whether 34, 33 would hold. If we get back under 37 again, we could be going to 29.30. So I'm neutral on this. All I'm doing with Bitcoin, while it's still below this level, as in the 46,000, is you're looking at it from a breakout perspective, a retest perspective, look for confirmation, and of course, if it breaches through, the next key zone. This market has been literally just moving to the key zones, and that's what we've got to understand. If you've been following our analysis on crypto for a while, every single time it's gotten up here, we've talked about this big red area. I haven't even modified this big red area. It's been the same. If it gets into this zone, it's meeting with tons of sell demand. You can actually follow people where they show their wallets and they show transactions through the wallets of crypto. And obviously you have to be doing that if you're trading Bitcoin especially. And people are just moving wallets and selling portions here. That's what they've been doing. And down here, they've been moving wallets and buying portions. So it's a war of attrition between the bulls and the bears at this stage. So we've led up to this big bit of news. We've obviously got the core CPI print here. It's probably not going to be very good. Well, in fact, I don't know how the market's going to react to it. You could say the market is going to, people are saying the market's going to puke and it's going down. That's a guess. I don't like to work on guesses as much. I like to work on trying to add as much, I guess, information as possible together on it. And news is tough sometimes to go with here. We've also got the ECB press conference. So that's going to come out and that could be important for the European markets as well. Obviously the euro, etc. So we've got a lot of information. 8:30 a.m. starts off here at 7:45 a.m. That is New York time. Make sure you be checking that out. And I just want to say again, a massive thank you to everybody. 80,000 subscribers. We're on the way to my dream, which was always to hit 100. I think that's a lot of people's dreams out there. And I'll have to do something very special if we get there for you guys. I'll have to do something. I don't know what's going to be, but I think it'll be pretty special. So thank you so much for subscribing. If you enjoyed the video, please do subscribe, smash that like button, and we'll see you very soon. Just another thing I want to mention is we won't unfortunately be doing live streams for the next couple of days. We do have a conference up in Australia, up the north in the tropical area. And hopefully we hope to come out to the US sometime this year, a little bit later. So we will unfortunately have a little bit of a broken schedule in our closed live shows. I'll be still putting out videos from up there if I can over the weekend and the next couple of sessions. And as always, just want to thank you for the support. So bye for now. Catch you soon.